Hello guys, what's up? My name is Aayush Khanna and you are watching our channel Aayush Khanna classes. Now, in this video, I'm going to do this vision with you of heads of income heads. This video is applicable for CA intermediate and CMA intermediate, giving in May or June attempt, May or June 2019 attempt. Okay, now let's start with our revision. Now, as you know, that there are five heads of income. What are those? PGBP, salary, house property, other sources, and capital gains. I will be very slow while teaching because all the concepts and provisions will be covered slowly. Okay. Now let's start with our first topic, PGBP. First section, section 145, that is method of accounting. Now, what it says, income chargeable under this head shall be computed in accordance with the method of accounting regularly and consistently. Regularly and consistently employed by the SSC either cash or mercantile basis. This can be asked for MCQ for cash and mercantile basis. Okay. Now next, income chargeable under this head. Your teacher must have taught you about this section 28, income chargeable under this head. So I'll not taking up that. Okay, I am assuming that you know which are the incomes chargeable under this head. Now, second topic or third topic you can say, that is admissible deductions. Admissible deduction. This is I. Okay. Section 30. Firstly, now admissible deductions, as you may know, what are these? Firstly, section 30, amount paid on account of rent, rates, taxes, repairs not including expenditure in the nature of capital expenditure, not including expenditure in the nature of capital expenditure, and insurance for buildings, and insurance for buildings used for the purpose of business or profession. Buildings. Okay. In case the premises are occupied by the assessee as a tenant, that is, he have given it on rent, then the amount of repairs would be allowed as deduction. Then the amount of repairs would be allowed as deduction only if he has undertaken to bear the cost of repairs to the premises. To bear the cost of premises. Only then only he has got the right to deduct from the income. Otherwise, it would be while computing total income, we would rather what? Add it or minus. Okay, as you may know. Then section 31. Section 31. What it says? Amount paid on account of current repairs and insurance of machinery, insurance of plant and machinery, furniture used for the purpose of business or profession. Used for the purpose of business or profession. Or profession, sorry. Or profession. Okay. Admissible deductions. This is included in as per section 31. Okay. Then section 32. Depreciation. Very important point. Depreciation is compulsorily allowable as a deduction. That is, it is not optional. Depreciation is compulsory. Sorry, compulsory and not an option. Now, what are the conditions for claiming depreciations? What are the conditions for claiming depreciations? Asset, firstly, asset must be used for the purpose of business or profession, for the purpose of business or profession at any time during the previous year. At any time. Okay, but if the asset is acquired during a previous year and is put to use for less than 180 days and is put to use for less than 180 days during that previous year, then only 50% of the depreciation is allowed. Okay, then only 50%, less than 180 days. You have to calculate number of days. For example, the machinery is purchased on let's say 2nd January, and the financial year ends on 31st March, and it has been put to use on 3rd January after all installation. Then uh, as you know, it is less than 180 days, so 50% of the depreciation will be allowed. So 50% of the depreciation would be allowed. The now second point, second condition, second condition, the asset should be owned, should be owned by the assessee, by the assessee, whether it's wholly or partially owned. Okay. Next, the depreciation, as you know, is allowed by the Income Tax Act 1961 on WDV basis of the. Now, what are the rates of depreciation? WDV of block value of assets. WDV of block value of assets. Block value of assets. Now, what is section 2 subsection 11? Block of assets. It means a group of assets falling within a class of assets, whether comprising first buildings, machineries, furniture, or being tangible asset, or furniture being tangible asset, or any know-how, patents, copyright, trademarks, licenses, franchises, or any other business or commercial rights similar nature being intangible, of similar nature. Okay, of similar nature. Now next, Now, what are the rates? As per section as per section 43 subsection 6, what is the written down value of assets? See, firstly, written down value of the block of assets on as on 1st April of previous year. Add actual cost, actual cost of assets acquired during previous year, then total less money receivable in respect of any asset falling sorry huh, of any asset falling within the block which is sold, discarded, demolished or destroyed during the previous year, which is sold, discarded, demolished or destroyed during the previous year. We have to minus that. Then subtract WDV at the end of the year on which depreciation is allowed. Then on this amount, we have to calculate depreciation. Okay, now what is additional depreciation? As per section 32, as per section 32, subsection 1, clause A, additional depreciation at the rate of 20% of actual cost of plant or machinery acquired and installed after 31st March 2005. After 31st March 2005 by an assessee engaged in the business of manufacture or production or any article. Okay, it shall be allowed. It is normally if 50% of if the 50% depreciation case, in case of 50% of depreciation case, we would firstly provide normal depreciation, then 20% depreciation, then 20% depreciation. Okay, next section 32 AD. Let's take up with the next page. Section 32 AD. Now, what it says: in order to encourage the setting up of industrial undertakings in the backward areas, what industrial undertakings, areas of states of Andhra Pradesh, Bihar, Telangana and West Bengal. It allows a deduction for the amount equal to what, 15% of the actual cost of a new plant and machinery acquired and installed in the assessment year relevant to the previous year in which the such plant and machinery is installed. Okay, Now, what are the two conditions? The SSC sets up an undertaking or enterprise for the manufacture or production of any article or thing on or before. Please remember the date. This might be asked on or before, on or after 1st April 2015. Okay, in any state as notified by the central government. And second, the SSC acquires and installs new plant and machinery for the purpose of the said undertaking or enterprise during the year between 1st April 2015 and 31st March 2020. Between 1st April 2015 to 31st March 2020 in the said backward areas. Okay, this may be asked in MCQs. There's no practical sum for the same but can be asked in MCQs. Section 35. Expenditures on scientific research. Expenditures on scientific research. Expenditure incurred by any SSC. It allows the type of deduction. Any revenue and capital expenditure other than cost of acquisition of land on scientific research for in-house research for in-house research related to business is allowable as deduction. What are the sections governing it? Section 35 subsection 1 clause first and section 35 subsection 1 clause fourth z with which section 35 bracket 2. Okay, I hope you got it. Second point, deduction is also allowed in respect of any such expenditure incurred during 3 years immediately preceding the year of commencement of business. 3 years preceding the commencement of the business. Okay, such deduction is only allowed at the time the at the time in the year in which the SSC commenced the business. Okay, now next, in case of companies engaged in business of biotechnology, companies engaged in the business of biotechnology, in this case, or any manufacture or production of an article, deduction of 150% of the expenditure incurred on scientific research or in-house research and development facility is allowed. Okay, how much? 150%. Governing section 35 bracket 2ab. Okay, now next, you have to remember some rates too. See, contribution to outsiders. Contribution to outsiders. Contribution made by any SSC to certain specified or approved instructions shall be entitled to the weighted deduction, which are as follows, which I am going to give you. 35 bracket 1 bracket 2. Contribution made to any research associations for scientific research, 150%. Second, 35 bracket 1 bracket second A. Company for scientific research. Company for scientific research, 100%. 35 bracket 1 bracket 3. Research association for the research in social science or statistical research in social science or statistical research, amount 100%. And 35 to capital A, to the national laboratory or university or any IIT, that is 150%. Okay, now next section. Now section 35 AD. Section 35 AD. Section 35 AD. This section provides for the investment linked tax deduction. Investment link. Investment link tax deduction. I'm assuming that you know which type of business it is allowed. That is 100% of the business, 100% of the capital expenditure incurred. 100% of the capital expenditure incurred. Okay, next 35 triple C, section 35 triple C. It says that 150% of the expenditure incurred by the SSC on notified agricultural extension project in accordance with the prescribed guidelines. 150% of the expenditures incurred by the SSC on any notified agricultural extension project. Okay, next section. These are very small sections. 150% of expenditure other than expenditure in nature of cost of land or building incurred by a company on notified skill development project, in skill development project or notified skill development project. Okay, next. Huh. Small points, as you may know, are there. As you may know, which incomes are allowed as deduction and which are not. Okay, now as per section 40 capital A bracket 2, what it says. This is the important section, so I'm covering only the important ones, not all of the sections. Okay, you have to just read all the provisions, and but you have to focus on these sections more. 140A to 40A3, and that's all, and which I've done till here. And 44 section में है थोड़े that I'll discuss. 48 to first, any expenditure incurred in respect of which a payment is made to the related party or person or entity to the extent it is excessive to the extent it is excessive or unreasonable by the assessing officer. By the assessing officer. Now, what are the type of related parties? In case of individual, any relative of the individual, like say any father or son or mother, brother, sister, everyone. Firm, any partner of the firm or relative of such partner, and the member of the family or associations. Okay. Third, HUF or AOP. HUF or AOP. Any member of the AOP or HUF or any relative of such member. Company, director of the company or the relative of director. Okay. Anyone. I mean anyone. So next, section 40, capital A bracket 3. What it says. Any expenditure in respect of which a payment or aggregate of payments made to a person in a single day, otherwise done by an account pay check or account pay bank draft. Check, account pay check, not beer, pay check or account pay bank draft or ECS through the bank accounts ECS exceeds rupees how much? 10,000. Okay, these are the expenses of payment not deductible in certain circumstances. Not deductible. So while computing total income, we have to add these. We have to add these to compute the perfect or the original total income. Next, Huh. What if the bonus or commission for the services rendered by the employees where such a sum would not have been payable to him as bonus or dividends if it had not been paid or bonus or commission. Okay, now one more small thing: whenever the bonus of previous year is paid to the employee, the bonus or commission paid is paid to the employee for the previous year. And the assessment, yeah, let's say for the year 2017-18, the company XYZ Limited have paid a bonus to Mr. A in the previous year 2018-19, assessment year 1920. Okay, then in that case, if the payment is made on or before 30th September, that is the date of filing of income tax return, then it would be allowed to be allowed to be deducted from the income. Okay, but if it is paid after the income tax return, after the filing of income tax return, then no deduction will be allowed. That is, it would be added back total income while computing total income. Next section, section 43 CA. Section 43 CA, what it says: where the consideration for the transfer of any asset, consideration for the transfer of an asset other than capital asset, being land or building or both, is less than the stamp duty value, is less than the stamp duty value. The value so adopted or assessed or assessable, that is the stamp duty value, shall be deemed to be the full value of consideration for the purpose of computing income under the head business and profit and gains from business or profession. Okay, in any case, stamp duty value is to be taken. Next, now section 44AB, it says mandatory audit of accounts of certain persons. Every person, in case of every person carrying on business, carrying on business, then in such case, if the total sales turnover or gross receipt in the business exceeds exceeds 1 crore sales, then this in the previous year. Now, in case of a profession, like Mr. X, a practicing chartered accountant, in that case, 50 lakhs is the limit. 50 lakhs. Then every person carrying on a business were deemed profits are taxed on presumptive basis. under section 44 AE. In that case, the income is claimed to be the lower than the deemed profit under the respective sections. Okay, and where every person carrying on a profession where 50% of the gross receipt, all sales, are deemed to be profits under section 44 ADA. In that also case, the same limit, the same thing. Okay, now next. Now section 44 ADA, what it says. Section 44 ADA. An SSC being a resident in India who is engaged in any profession as referred to in section 44 AA bracket 1. You just have a read on this section 44 AA bracket 1, such as legal, medical, engineering, or any type of professional, architecture professional, chartered accountant, or technical consultancy, and so, as notified by the board of official gazette. Then in that case, whose total uh, sales or turnover is not exceeding 50 lakhs in the previous year, in that case, the deemed profit and gains shall be 50% of the gross receipt. 50% of the gross receipt. I hope you got it. 44 ADA. Okay. Now, as you might know, Rule 7A, Rule 7B, or Rule 8. Rule 7A, manufacture of rubber. Business income. 35% would be treated as business income, and the rest shall be treated as agricultural income, which is exempt but taxable. In case of manufacturing of coffee, manufacture of coffee and sale. In case of manufacture of coffee, sale of coffee and cured. In that case, 25% plus 75%. In case it is also roasted, sale of coffee, sale, cured, roasted and grounded. 40% and 60%. Manufacturing of tea, 40% and 60%. Okay. The netting here is little bit bad. I repeat, it is a sale, cured, roasted, and grounded. And grounded. Sale, cured, roasted, and grounded. Okay, grounded. I hope till here you know. Now you can read by yourself. Section 44 AE is easy. Section 44 AE. Then 44 AB. I think enough. And 44 AA. You can do these by yourself. Easy. Okay. I hope you got it. Now, revision of PGBP is over. In the next videos, I'll discuss other revision topics. Okay, other as heads of income. Thank you.